What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. In the Weekly Watchlist, I do a technical analysis and give you some of my thoughts on the tickers here on the left. We have the broad market comprised of SPY, the Qs, and IWM. After that, we take a look at a couple companies, looking at Apple, Netflix, Tesla, Alibaba, Facebook, NVDA, Roku, and two new additions, Microsoft and AMD. If you would like to see me add anything to this list, let me know down below in the comments section, or feel free to shoot me an email. And with that, let's get started with the market. Alrighty, like last week, I would like to point out that we are starting with the weekly chart here on SPY, and a bit of a change in narrative here on the very long term. We can see a head and shoulders starting to emerge. We have shoulder one, head, and then shoulder two could potentially form somewhere in this zone where this orange circle is. So if we see a lower high compared to our all-time high, then that would imply a bearish pattern for SPY on the very longer term. And what we would want to see to essentially start taking off long positions and start looking for more short positions is a break of this neckline, meaning that SPY comes down and breaks our recent low, and it would imply that we could continue to lower lows. So that is something to keep in mind on the very, very long-term horizon, depending on what happens this week in SPY. But we're going to zoom in a little bit. There's a glaring issue that most of you can probably see right off the bat. We have a huge gap on the weekly chart. Wrong tool. So we're looking at a gap from the low of this candle at 284.40, so we're just going to get close enough, and a high of this candle at 282.84, so somewhere in there. So a huge gap on the weekly chart, and if we go back in past history, you can see that the weekly chart rarely has any gaps. There's a gap here, but it filled the next week before the price went lower. Same thing here, gap down, but the prices filled it and then went lower. Gap up, prices came down. So the point is that gaps like this, and especially this big on the weekly chart, are very, very rare and something to be noted on your narrative. So keep that in mind on the weekly chart. We're going to go to the daily. What we can see on the daily is that SPY is just getting very, very overextended to the upside. If we zoom in a little bit more, we can see that we're outside the daily Bollinger Band up here on top. That's very faint, but hopefully you can see it there. We're starting to peak above it. Again, this is the huge gap we saw on the weekly chart. And if we draw in a resistance trend line, we're starting to sort of peak out and get up to the top of it. If you look at some of these highs and the way the trend has been going, we're more than due for a bit of a pullback here in the market. And I would say filling that gap is more than likely. That would still give us a higher low on the daily chart. As long as we hold above 277.50, we'll call it, somewhere in this level down here, we are looking at a higher low on SPY, and the bulls will still be in control. So keep that in mind on SPY. If we look at the 30-minute time frame, we'll just go down one more. Again, you can just see how we're hitting our head right up against this resistance every time. More than likely that we get a pullback come next week, but we can see some support starting to form. If we look at something like this, that would be a good first target for the market to come down and touch that. It's going to coincide, as you see there, come Monday with our 286.63 level, which is our previous all-time high before our current all-time high. So that would be a solid bounce intraday, I would imagine, and then a continued move lower to possibly fill this gap here. So that's the SPY 30-minute. We talked about the financial sector in last week's video potentially having more room to go bearish, but obviously that was not the case. It started to move back up. Right now it's butting its head up against the 200 SMA, but because this has gone bullish, that is a good sign for the market. If we can see a breakout over some of these highs or get back up to these highs, that would be a good thing, and I would imagine drag the market higher. XLK for technology, same thing. Technology was pushing forward and financials were pulling back, but now they seem to be moving in the same direction, which I would imagine is why the market had such a bullish week with the gap up and all of that. So some things to keep in mind. XLK could continue higher, or it could have a bit of a double top here if you look at our previous high here and where we sort of sit right now. That could potentially pose an issue. Oil and gas, I just want to bring this one back up just because of how beautiful the setup still is. It's starting to break out now, so it's not too late to catch the move on this one. We were looking at a breakout above 31.57 just about, and you can see it's starting to peek its head up above there now, and it could potentially run all the way up to 34 as we talked about this level up here. So keep that one in mind on XOP. Now, sort of looking at the VIX just to wrap up SPY, you can see that we're starting to get back down below our $15 mark and get back into the grind zone. So market fear is sort of drying up, shriveling up. You can see we made a new low on Friday, although the prices recoiled and bounced there. I would imagine the prices come back up, or the fear gauge comes back up and then potentially gets knocked down at a lower high. If not following this trend line, definitely maybe this $15 resistance now that we're below it. The Qs have a very similar narrative as the SPY. We're not going to go through the monthly, daily, all that stuff. So we're just going to look at the daily chart here. Again, bumping its head right up here. It didn't close at the high of the week as did SPY. So you can see that we're sort of already running into a bit of resistance. A pullback into this level would be good. Again, these market as a whole just needs to sort of cool off a bit. So Qs getting a bit overextended too. IWM is a great one to talk about this week just because of where it is in position or relativeness to some of its trend lines. You can see we've broken out of this downtrend. We can get rid of this one. This one's kind of old at this point, so we'll remove that. But we're breaking out of this downtrend and we're finding resistance right at our next downtrend. So because this has happened, this might be a signal that the market wants to go higher and possibly push up towards those all-time highs. But this downtrend is broken. We will see a higher high, and the next step on this one would be to see a higher low. So we want to see a low anything higher than 148.28, and the bulls have plenty of room to do that. We could pull back into this trend line and then bounce, and that would be fine. But again, remember, we do have a very thick resistance zone right overhead here between 158.95 and 158.12 just about. So those are some of our previous highs that we kept on our chart from here and here. So keep that in mind on IWM, but very bullish breaking this resistance trend line. All right, getting into our companies now, we're going to start off with Apple. Apple has held on to this support trend line. As we talked about, it did make a higher low here compared to here. Nice pullback, and now the next breakout point here is at 197.57 just about. If we can clear that, a $3 or so move to psychological resistance at 200 is more than likely. Anything after that, Apple has quite a bit of room to run all the way up here to 214.51. So look for the key breakout here of 197.57 and then 200. Netflix has just gone sort of sideways over the course of the week inside of its tightening range here. Getting rejected here, I could potentially see this as a head and shoulders pattern where we have shoulder 1, head up here, shoulder 2 forming. If we break out to the low side of this trend line, I could see Netflix coming back down here to 350, just about to test those lows. Anything after that, we're testing sort of these lows down there at 342. If we do get a breakout to the upside, there's quite a bit of resistance you can see Netflix has to get through. We have our recent high, and then if we zoom in or zoom out a little bit, you can see our high here is also going to act as resistance. But if we can get through that, then you can see that there's quite a ways Netflix could go all the way up to 400 psychological, and then anything after that is way up here at our previous high. So Netflix could get interesting depending on which way it breaks out of this little consolidation pattern. I'd say more than likely at this time, though, it is to the downside. Tesla had an absolutely wild week. Again, just another reason why it's tough to play this one. Absolutely no overnight holds. Crazy volatile. Anyways, it just so happens that this big gap down happened right as the price approached our resistance trend line. So boom, we got the big gap down. Right now with these two pretty green days, I would say it's more than likely the price comes back up. If it can clear this area here, that would be a good thing for a gap fill, potentially all the way up to 287.24. If we can get into that, that would be great. Possibly a gap fill reversal there. But again, just keep your eye out on it. We are having a higher set of lows here. So the next thing we would want to see for a trend reversal and a possible move to the upside is a higher high. So we would want to see this level here break. This one comes into play at 295.95, 296 just about. If we can get a higher high, that would mean that the trend could potentially change here on Tesla. Alibaba, again, just a really gappy chart. This one's been sort of ugly. Just in terms of how the patterns are playing out. But we are holding on to our support trend line, which is a good thing. We are seeing higher lows. Good thing, again, right now, it looks like the key breakout point is going to be breaking our high from, 4.1. If we can break out above that and not get rejected on Monday, that would be a good signal that we are going to come up here to our next resistance level at 188.04. Anything over that puts BABA sort of in a breakout zone. If you zoom way out, you can see that there's not too much in the way of it running all the way back up here to 198, possibly 200 psychological resistance there. So keep that in mind on BABA. Facebook had a nice week, finally getting out of our sort of resistance zone here at 171. You can see though it looks like the price wants to come back down, potentially backtest this area. I would hope that we find support around this area first, based on some of these highs. If we can find support there at 174.10 just about, that would be a great buy signal on Facebook. If we find support here, next target would be 180 just about. Anything lower than that, we would like to see this trend line hang on. 50 SMA is starting to coincide with that. You can see we're a little bit overextended here compared to the Bollinger Band, so keep in mind a small pullback on Facebook before a continued move higher. All right, so NVIDIA and I would imagine AMD as we get there, the whole chip sector and technology sector has continued to break out, and you can see we're starting to break out here on the daily chart as well. Again, getting over our 188 resistance after breaking out of this symmetrical triangle here, so we can get rid of that. And you can see we'll keep the support trend line, because if we pull back into it, it will certainly be a buy. We'll get rid of that. Next level of resistance is going to be our 200 SMA on the daily chart. If we can get into that, that would be quite the move here on NVIDIA. Again, nothing really showing up in our past. We did get the gap fill, so potentially keep in mind a reversal if we can't put in a higher low. So if we give up this low here, which obviously would be quite a nasty move to the downside, look for a reversal and a continued move lower there on NVIDIA. All right, ROKU has gotten back down below our trend line. Again, we talked about getting bullish if on Monday it opened above, and obviously it did. We got the small breakout above, but it looks like it was going to be a fake out as prices have moved substantially lower than Monday here. So we had a red week essentially on ROKU, and now we're looking for support to come into play down here at 59.72 based on the set of lows. Also 50 SMA coinciding to provide a bit of a super support there. If that falls through, looking for our next support trend line to play. And any sort of bounce is going to be a back test of this line or our 68.1 resistance. Alrighty, Microsoft. I've not annotated the chart yet, so this should be interesting. We're going to go ahead and mark off our highs and lows. At the moment, we have a high there at 120.82 just about. This low from our recent pullback is at 115.45. Looks like there's some resistance here, support here. So we'll just keep that there in mind for the near term. But we do have what looks like a couple of trend lines, some support. I'd say this is what we have at the moment. So Microsoft, what it really needs to do is put in a daily higher low. So if we can pull back a little bit, put in a higher low, and then attempt this resistance zone up here at 120.82 again, it would look like we have an ascending triangle, and the breakout point there would be 120.82, obviously. Anything higher than that, we got to scrunch up the chart, see if there's any resistance in the past. Nothing recently, so I would say Microsoft is in blue sky territory if it can break out above 120.82. Again, if it just keeps forming these higher lows on the daily chart and higher highs, we are looking good. Obviously, we've had higher high, low, higher low. Again, we just need to hold anything above 115.45 to put in a higher low and continue our bullish trend in the upwards direction. Okay, it looks like I have annotated AMD in the past. Pretty interesting, I guess, considering I haven't looked at this one in a while. Our pattern has sort of held up. Maybe the last time I looked at it was back in, well, it must have been at least here. So back in February. Anyways, our symmetrical triangle or rising wedge sort of is holding up. You can see it with support, resistance, just about. We'll sort of that. It looks like we're sort of trying to break out here, but it doesn't quite want to break out. You can see that red day on Friday pulling us back into the range, very overextended on the Bollinger Bands. I would say a move back into the range is more than likely. Drawing in some resistance and support here, you can see we have $29.96, just about $30 there at the high. We do need to hold on to our 24.62 there to continue the uptrend and again put in a higher low, but it does look like we also have a big gap on the chart here to fill potentially. If the prices can break back down below 28, I would imagine a gap fill to 26.82. Again, this is going to be beautiful because it coincides with this high here at 28 as well. So look for that on the upcoming week. If we can pull back down, get out of this overextended state, pull back down, possibly fill the gap. If we bounced from here and moved in the higher direction, that again would be a higher low and keep AMD on a bullish track, continuing to highs. So that is our narrative there. I hope you enjoyed. If you learned anything, let me know down below. Again, if you'd like to see me add anything to these watch lists, let me know in the comments section. Shoot me an email. If you enjoy the content, leave the video a thumbs up. And don't forget to subscribe for more of this content. I hope you have a green trading week, and I'll see you in the next one.